Hey everybody, Troy Marsh here with Marsh Home Group and Keller Williams Consultants. Hopefully you guys are having an awesome holiday season so far. First of all, I want to wish you all a Merry Christmas, and I hope this holiday season brings you and your family a ton of joy. Let's jump right into the December 2022 market update. So, biggest changes that we've had here in November are that we've continued to see the amount of inventory going up compared to last year, meaning that um, November to November, the number of homes that were for sale, if we grab the pointer here, we're up 42%. That being said, as we typically see as the year gets closer and closer to the end of the year, the seasonality brings that number down as we go further and further into the year. And we'll talk a little bit about how those trends might be a little bit different this year. But in terms of inventory, we're definitely going down. So I would say those are the biggest things. We're seeing, again, November to November sales compared to last year. That's this column here. We're seeing sales down about 29%. The new listings, though, also down about 25%. So if we were seeing the same number of new listings, we would definitely be seeing a lot more properties sitting on the market. But because the new listings is down along with the sales, we haven't seen nearly the increase in inventory that we would expect to see. I would say again, as I've mentioned for the last several months, interest rates have been the driver of the economy, and certainly real estate is no exception. Given the fact that we started off the year at 3%, we were up all the way up to 7 or 7.5%, kind of in that mid-October range. Now we have come down, and that's what we're going to look at on this next slide. So given, if you've been paying attention to my Instagram stories, here over the last 2 to 3 weeks, we've had several things happen which have driven interest rates down. The first thing, which was actually more like a month ago, was the inflation numbers came in lower than expected. Then we had similarly good economic news that inflation was down compared to what we expected, and then we had that same news again this week. Now the impact this week hasn't been as large as it was last month in terms of a drastic drop in rates, but it has pushed us along in that same direction. The Fed also came out and said that they're recognizing that their interest rate increases have begun to make an impact in the economy, and therefore they're slowing the pace at which they're doing those. So just here recently this week, they've lowered, they only raised rates by 0.5% instead of 0.75%. So all news that the mortgage markets have liked, and therefore we've seen rates come down in some cases as getting close to 5.5%. For most, in terms of conventional mortgages, closer to that 6% range. So we'll continue to follow that and see what happens. And if we go back here, I'm going to go back one slide real quick. Maybe I'm not going to go back one slide real quick, but what I want to show you is that right towards the end of November, beginning of December, when we saw that second interest rate drop, we started to see more activity in the market, and that's shown here with the pendings. Typically, if we look at the charts and we look at the numbers, last year there was a 25% decline from November to December in the number of pending contracts that we had, which is what we typically see this time of year. This year, we've actually seen a 5% increase if we compare the first 13 days of November to the first 13 days of December. Whereas again, reminder, last year we saw a 25% decrease. So it's a net gain of 30% in terms of activity for the first 2 weeks of December this year compared to November. That's pretty significant. And so in my opinion, that's largely due to the fact that interest rates have been declining and we have more buyers jumping into the market. Now we have continued to see average sales price increase. You can see that we started off the year with about a 300, well, let's go to the average sold price, $254,000 average sales price. We're now currently at 321 average sales price. And don't be too alarmed. We do see seasonality with the ups and downs of the average. And a lot of that has to do with we tend to see a lot more activity in the higher price ranges during the summer, kind of in between the school years. And so when we look at average instead of looking at median, prices, we tend to see a little bit more fluctuation in that as we enter the colder months of the year. So that's very normal. This is the big one that I want to talk about for just a quick second is months of inventory. So you can see that obviously when we were into spring and summer in particular, we see really low months of inventory. It's pretty normal that starting in that May or June timeframe that we see that inventory tick up. But we're still in about 1.5 months of inventory. And what that means is that if we didn't list any more new homes in the market, that in 1.5 months we would run out of homes to sell. And just to put that into perspective, a balanced market is 4 to 6 months. So we still have a long ways to go, but we are trending towards more of a balanced market, meaning moving out of a seller's market and into a buyer's market. However, I would say in Central Ohio, at least, we're still, due to low inventories, still in a pretty strong seller's market overall. So the question is, what does all this mean to you as a buyer and seller? So I've got my trusty hockey sticks here as an example for you guys. So available homes, I think we're trending in the right direction. Now what we've seen is more of a seasonal downturn in terms of new listings and homes for sale, but overall we're up compared to last year despite all of that, and so there are more homes to choose from. The number of sold homes have declined, like I said earlier, by about 25 to 30%. So therefore, that is not a good thing. We do want to see more buyers enter the market. New listings have also gone down. I like to call it the marry the home and date the rate. But remember, every seller right now, or not every seller, but for the most part, sellers have to agree to sell their home, but they're also selling that 2.5 to 3% rate that they have. And that's put a lot of people on the sidelines with 30-year fixed in that 6 to 7.5% range. My prediction is as we move closer to, if we get under 6, and especially if we trend closer to 5%, for those 30-year rates, we're going to start to see more people choosing to go ahead and put their house on the market. And we're also going to see that as we enter spring. We definitely are seeing interest rates trending in the right direction, so that gets a green hockey stick. And then average sales price, still a green hockey stick. We're still up about 8% in terms of prices year over year. And so we're still sitting in a pretty good position. Those of you that have owned homes over the last 2, 3, and especially going back 5, 6, 7 years, have very large amounts of equity if you haven't done a cash out refinance. So most of you are sitting in a really strong position, and I predict that we're going to see more people leveraging some of that equity through home equity loans, and then once rates come down, through cash out refinances, or to take that cash and put it in a new home. Thanks so much for listening. I hope you have a Merry Christmas, and I will see you next year.